Silver dealers say sell and put it into this. Your local dealer has changed their game plan, and this is what we need to follow. This silver here has been sitting on the shelf of your local coin shop because people, for 3 to 4 months, we're not jumping in and buying. Now, what your dealer is doing, and this is what you and I need to follow as silver stackers, these are the moves that we need to make. We need to start thinking like a dealer. What your dealer is doing is they're noticing the pattern in silver that happened 1 year ago, and it's happening again. 1 year ago, we had a silver to gold ratio that dropped, and dropped meaning it tightened. And when that tightening happened, that's when this metal, silver, that's when it got its momentum, and it really shot up in price. $10. We had that $10 jump. You and I as stackers, we're all waiting for that $10 jump in spot price. We went from about $23 to $33. And yes, since then, stackers are not buying as much silver because we're in a state of correction. We're in a long-term performance lag. That's what we call it. Silver does that. It's not broken. Silver's not dead. It goes through that stretch of time. And now we're seeing this again today. And this is why your dealer at your local level, they're making these moves. They're noticing that just this week, at the time of this recording, the silver to gold ratio is starting to move again. It's dropping down. It's tightening. It was at about 105 a few days ago. Now, at the time of this recording, we're looking at about 98. 98 ounces of this silver will get you 1 ounce of gold. And what your dealer is doing is they're making their move now. I'm not giving financial advice. I'm just sharing what my dealer shared with me. They're making their move because they're seeing any extreme in the silver to gold ratio, whenever it's very wide. For example, 2 weeks ago, we had a very wide spread. It was about 112 ounces of this silver would get you 1 ounce of gold. And one of my dealers that I talked to here on my local level, he jumped in. He swapped out 3 ounces, maybe even 4 ounces of gold, and he got all that silver. Doesn't have to pay a premium on it, and he could then sell this with a premium, and that's how he makes his money. It's really smart. This is how you and I need to think about silver. For years, I've just been following the spot price. I ignored the silver to gold ratio. I just focused on spot, but I was wrong. We need to watch what dealers are doing. At the top of this video, I mentioned that dealers look for a extreme. When the silver to gold ratio is really spread wide, like it has been, they make their move. When it's tight, meaning it's gone down to 34 ounces, maybe it was 2008. 34 ounces of this silver got you 1 ounce of gold. They make their move. They swap silver for gold. And at the time of this recording now, this is what my dealer's telling me. Hey, the ratio is changing, so we have to get on it now. I'm not giving financial advice. I'm just telling you this is what he shared with me, and these are the patterns of silver that dealers look for. So as this is dropping this week, dealers are making their moves. They're taking what gold they have, they're swapping it out, and they're getting that silver without paying each $2 premium that we pay with the taxes on top of it for each of these ounces. It's really smart. And that's the way we need to be looking at silver.